So today we're going to talk about how to secure funding for your real estate deals. Now, when I talk about funding, I'm talking specifically about financing, okay? Loans, in other words, mortgages. And I'm going to give you some great tools and tips in how to do this. And if you don't know me, my name is Rod Khleif, and I host the Lifetime Cash Flow Through Real Estate Investing podcast, which I'm blessed to say is the largest commercial real estate podcast, I'm pretty sure, in the world now. We're over 16 million downloads, and my focus is multifamily. So that's what I'm talking about today, is just multifamily. All right, let's get into it. So here's what I plan to cover today. First of all, the importance of funding and why it's so important to secure debt for your real estate deals, okay? Second, the different types of financing that's available, funding of financing that's available. How to build a strong financial profile so that, lenders are interested in working with you. And there's a typo there, approaching lenders and investors, and just some other tips for successful investing. So let's get into it. Okay, so the importance of funding. Here's why virtually every large and small real estate investor on the planet uses financing to secure real estate, to buy real estate. Why? The biggest reason is leveraging. Okay, you're able to leverage and you're able to build scale. I get people that call me and say, I've got X amount of dollars and I don't feel like I'm going to get very far buying real estate. And I say, you're right, because you're using your own money. There's so much money looking for a home right now, and you're able to finance these deals. You don't need to use, by the way, you don't need to use your own money to do commercial real estate. Okay, yes, you need money to buy these assets, but it doesn't have to be your own money. I don't know about you, but I'll take 50% of something over 100% of nothing any day, right? And so, that's why it's so widely used, and there's so many benefits to using good quality debt to purchase commercial real estate. When I say good quality debt, there's some people that are going to have some challenges over the next couple of years. They got adjustable rate debt. And, but with that, there's going to be some incredible opportunities, because some of those deals are definitely going to go south. So there's going to be some distressed assets to buy. In fact, let me tell you something. You're in the right place at the right time, because I really believe there are a lot of incredible deals coming with this current economic environment we're in. But anyway, I digress. So some of the benefits include leverage, of course. You're able to get scale. You're able to expand your portfolio. And you're able to maximize returns. So what does that mean? When you're bringing other people's money in from investors, which is really how most of my students buy these assets. By the way, let me brag for a minute. My students now own somewhere between 160 and 170,000 units. And I've only been teaching 5 years. And most of those students don't have their own money in these deals. They raise the money to buy these things. But when you're using debt, you're able to maximize the returns to those investors, because the less amount of money that you put into the deal, the higher returns you're able to calculate over a period of time. See, if you pay cash, your returns for you pay cash for a property, your returns are going to be less than if you finance 70% of the deal and you've only got 30% of investor money in the deal, if that makes sense. So you're able to maximize returns, you're able to scale higher and actually keep going if you're using other people's money in debt. And you're able to leverage. So it's, fantastic, which is why almost all real estate investors utilize debt, and investors as well. Bring in investors. They call that equity, bringing in equity. So here's the different types of loans that are available for commercial real estate. There's, of course, traditional bank loans. Okay. In fact, that's about a third of the marketplace, traditional bank loans. And then there's Fannie Mae and Freddie Mac. Okay. Now, Fannie Mae and Freddie Mac are called conforming debt. Okay. And they are non-recourse, okay? So non-recourse means if they take the property back, they're only taking the property. They're not coming after you personally, okay? And they're fantastic loans. Now, there's some requirements with Fannie and Freddie. For example, the property has to be 90% occupied for the last 90 days, okay? Physically occupied, 90 for 90 it's called. But they're fantastic loans. And then there are, of course, just like in single-family spaces, private lenders and hard money loans. We have those in my space as well, which is commercial multifamily. And now when I talk about commercial multifamily, I mean 5 units or higher. Residential multifamily is a duplex, triplex, fourplex, but commercial is 5 units or higher. And so, but we have private lenders and hard money lenders in this space as well, okay? And then you can do joint ventures or partnerships. When I was in my 20s, I bought millions of dollars worth of property 50-50 with partners, okay? I found the deals, I fixed them up, I did all the work. They put up the money. Very often they signed on the debt, and we split everything 50-50, and everybody was happy. That was a joint venture. In a joint venture, everybody has to be active. And because those guys signed on debt, and then if I spent more than a certain amount of money on maintenance, I had to get their approval, that made it a joint venture. Now, if you take money from somebody and you just give them a return, then it's a syndication, okay? And that's not something to be afraid of. It just means you're going to hire an attorney, you're going to dot your I's and cross your T's, and you're going to have a few extra documents to get signed. And you know, by the way, I dig into all this stuff in great detail at my boot camp, and I have one coming up actually in Orlando, the only live event I do all year. It's in Orlando, September 15th through the 17th, and somewhere around this video, there'll be a link where you can check that out. And there'll be about 1,000 people there. And just so you know, this business is a team sport. It's really more who you know than what you know, and there'll be incredible opportunity to network and meet other people there. And of course, I go deep for 3 days on all of this stuff. And it's not a big sales pitch. I talk about my coaching for 30 minutes. The other rest of the 3 days is all full-on training. And so I hope you can come. Again, September 15th through the 17th in Orlando. It'll be a lot of fun. All right. Now, how do you build a strong financial profile through a team? And this is the operative word. Like I just said, this business is a team sport. Now, here's the thing. You've got to have liquidity equal to 10% of the loan amount after closing, post-closing, and you have to have a net worth equal to the loan amount. Now, that could be tens of millions of dollars. You're like, I don't have that. Well, that's the thing. The team has to have it, okay? Not you, okay? In fact, you could find one high net worth individual that's got, you know, a high net worth and has liquidity, put them on the team and you're golden, okay? And so, now you do have to have some experience as well, okay? And what most people do here is they will find a team or a person that's already bought some properties, and they'll say, hey, if I bring a deal, can we partner? Or if I bring some money to a deal, can we partner? And so, you know, and it's called a sponsor. And that's pretty much how everybody does it. That's one of the reasons that my warriors, my coaching students have been so successful. Like I said, 160 to 170,000 units is because they get together to do those deals. Most of them are done between warriors. And by the way, if you don't listen to my podcast, I highly encourage you to listen to my podcast because I have a lot of my students on, and you can, you know, see yourself in their shoes because, you know, every walk of life has been successful in this business. Single moms, you know, people without a lot of money and stuff like that. So you can do this, okay? Don't be intimidated by this. But again, we go much deeper at my boot camp if you can make it there. But, you know, and then you have to have the ability to raise capital, which is, again, why it's a team sport, okay? It's absolutely a team sport. Everybody rolls up their sleeves and works together to do this. And these are the requirements. You got to have a net worth equal to loan amount, liquidity equal to 10% of the loan amount after closing, and you got to have some experience. But you can get that from one person, and it's the team. They pull it all together. So if you've got a $10 million loan amount and you've got 3 people that have, you know, 3 or 4 million in net worth, you put it together like that. Or by, you know, even if you don't have much net worth, you align with people that do. That's how everybody does this business, guys. So don't worry about this piece of it. This is probably one of the easiest pieces, okay? Now, here's some super important pieces about doing this business. You want to approach lenders early. Now, by the way, if you're doing this business and you've got a deal that you feel like it's a good deal, if you DM me on any social, I'll give you a couple of great lenders that we use, that my warriors use. So don't hesitate to DM me if you've got a deal and you're looking for a lender. But here's the key thing. You want to start early, and you want to start, you know, if you find a deal that looks like it has merit, you want to talk to a loan broker almost immediately to see what sort of debt's available, because of the economic uncertainty that we're in right now, debt's a little all over the place. So you really need to lock it in early and see what's available. And like I said, if you've got a deal, even if you're not one of my students, it's fine. Ping me and I'll send you in the right direction for a loan broker. Now, I would recommend use a loan broker versus going directly to a lender. I know I said lender earlier. I should have said loan broker. Here's why. Because there are numerous lenders out there, but a loan broker can help you identify the best one for your personal situation, for that particular asset. And they can help you, they can help position you in the best light for a lender, okay? So they're kind of like a middleman between you and the lender. And if you're newer, you're crazy not to do it this way, because they will help you get the deal through, okay? So a loan broker. And here's the other thing, super important in this current environment that we're in. Don't be aggressive on your projections, okay? Don't assume everything's going to be fantastic, because we're heading into some soup right now, right? I mean, rents may not be going up that much over the next couple of years. In fact, on our projections, we're doing 0 rent increases in year 1 and then 3% year 2. And that's just today when I'm shooting this, in the middle of 2023 here. So, don't be aggressive on your projections. Right now, it's a time to be conservative, but deals are coming. I mean, we've got offers in on 2 deals right now. They are coming out of the woodwork right now. So if there was ever a time to learn this business, it is right freaking now. Do everything you can to get to my boot camp, start listening to my podcast, and get up to speed as fast as you can, okay? So here's how you've got to approach investors as well. So you should look into your, into your database. We used to call it a Rolodex back in the day, where you'd flip through cards of people, that you knew, but you want to look at your contact list and see who might be a prospect to invest with you. Obviously, friends and family as well. And you just start talking about the business. Hey, I'm getting into multifamily. We're finding some phenomenal deals. By the way, if you ever know anybody who wants to partner, I'm always looking for partners. It's that simple. You just have that conversation right there. And then once you find a deal, you've got to craft a compelling business plan for the deal, okay? And if you come to my boot camp, we actually give you an example of this. But if you have deals presented to you from other operators, you're going to do something like that, okay? Like I say, we give you what's called a sample deal package at our boot camp, so you can actually show that to an investor and say, hey, this is the kind of stuff we look for. But, you're going to have someone, you or someone, prepare a detailed financial pro forma as to what the property is going to do, okay? That's super important, because investors want to know, what's your business plan? An apartment complex, just like any business, needs a plan. What you're going to do with it when you get it. What are you going to fix up? Where are the rents going to go to? What are the projected returns? And that's what you do with the financial performance. And then you're going to, put together a professional presentation. And again, we show you one of those at the boot camp. But, if you're out there working in this space, you'll find people and they'll present deals, and you can just watch how someone else does it as well. But then you've got, the most important thing you can do is network and build relationships. This business is a relationship business. And that's why, something like my boot camp or whatever, somebody else's is fine. But get out there in the groups that are talking about commercial multifamily, larger multifamily, over 5 units, and just start networking, just start building relationships. I can't tell you, that is the biggest secret to success in this business. It's more important than what you know. It's who you know. So that's how you get rolling there. And here's some other, like last tips on here. You got to start early, okay? Do not bring in a loan broker once you've already got the deal under contract. The minute something looks good, you need to involve them. And like I said, DM me and I'll give you a good broker. And you want to, have really great communication with your lenders and your investors. Now, as you start talking about this business, you want to start keeping track of the people that are interested. I'd encourage you to implement a CRM, client relationship management software. We use HubSpot, but there's Zoho, really simple systems, Insightly. There's lots of CRMs that are free to start. I recommend HubSpot, though. That's my favorite. Okay. You're going to want to really study the market that you want to buy in. And again, we go into all of this in great detail in my boot camp. I don't need to sell you on my boot camp, but if you're serious about this business, boy, I would do everything you can to get there, or go to somebody else's, whatever, but learn it as fast as you can. Okay. And, you're going to want to highlight the returns in your presentation. You're going to highlight the returns, what you've done to mitigate risk. If you've stress tested the deal, for example, stress test meaning, what's your break-even cash flow, for example, on the deal. That's an example of mitigating risk. And then, you want to be flexible and open in negotiation when you're working with the lenders, when you're working with your investors, and when you're negotiating the deal. So again, I go into all this stuff in great detail. I do it for 3 days. Obviously, I can't do that on a quick YouTube video here, but I'm trying to entice you to learn this business, get excited about it, because you absolutely can do it with none of your own money. No question you can. I've got scores of students that have done that. And, this is not like some guru, no money down crap. This is real, okay? You could absolutely do this. I've done it. Scores of my students have done it, and you can too. But, I know it can seem a little intimidating, but everybody started where you did, okay? So don't be intimidated by it. You just approach it. You go after it, a little bit at a time, like how to eat a whale, one bite at a time, right? And you'll get this. Everybody was once an amateur. So, Don't be intimidated. Get excited, because I'm going to tell you, I think the greatest transfer of wealth in history, in our lifetimes, is upon us right now. But you got to get up to speed. And if it's, I think you can make money buying businesses, certainly buying other types of real estate, houses, warehouses, retail. I wouldn't buy office right now. Office is in big trouble. But if it's multifamily, get to my boot camp. I promise you'll be glad you came. And start listening to my podcast. That'll help you get up to speed faster. Anyway, if you want a lot of free resources, go to rodslinks.com. My bootcamp site is there. There's free books there. At the bottom is my goal setting workshop. You got to get clear on what you want and why you want it. Your goals are super important as well. So rodslinks.com will really help, fast track this for you. I'll see you soon.